Harry Dent, the author of the book Zero Hour, he put it out quite a while ago, and it's beginning to look like, now's the time. We should have all read that book. He was on the program in the fall, and he said we are going to hit around March, and we're going to hit a Great Depression. He did, nobody knew about the coronavirus, but that was the trigger that forced this house of cards down. Harry, we talked about the stock market and everything else last hour. I want to talk to you about things like, for instance, inflation versus deflation. We're probably headed for deflation, where nothing has real value. Our homes are worth about half, right? Is that what we're headed towards?
Yeah. Basically, when the central banks inflated all this money, they didn't give it to consumers or even put it into the banking system or businesses or anything like they're finally doing this. They just bought financial assets from banks to give them liquidity to keep them from going under, and they ignited a huge financial asset bubble. And so stocks and real estate, stocks the most, then real estate, those type of and most bonds are way overvalued, and they have to reset back down to reality. That's going to destroy a lot of money.
Okay.
There's money in your bank account
so if you
spend, but there's money in your brokerage account that's going to disappear even more. That's money.
So if you can sell your house or have to sell your house, now is the time to do. I mean, there's no better time than right now. But if you don't have to, can you ride this out? I mean, what does it look at? Does it come back in 5-6 years?
It does not, Glenn. For the first time in history, we have a smaller generation following a larger one. The baby boom peak around the world, and particularly here in the United States, in births in the early 60s, and then their inflation impact 20 years later when they hit the workforce in the 70s. So that's done. We're never going to have that much growth again, and now the baby boomers are dying faster than the millennials coming along to buy. Real estate will not come back fast and will not come back new. I advise selling all non-strategic real estate and real estate that's bubbly. Even I'm not owning my primary home, but I own my vacation home on an island because it's going to better zoning and it's a special place. I don't even own my primary home right now. I'm willing to buy after this. You're going to get the bargain of your life. Here's the difference in real estate. What you said is to sell real estate right now. You've got less time. Real estate freezes up in a crash. Stocks, even when you're late, you can still sell. They're very liquid. Same with high-quality bonds and stuff. You've got to move on real estate now. Stocks, I'd say more like August, September, October into the election is going to be the time to sell at an even better price, especially if we go lower first. So real estate is the hardest to get out of, and you're going to get the biggest penalty if you wait because it just freezes up and nobody wants to buy it.
So we have 20%, let's just say, 20% unemployment. When does that number start to come down, Harry?
Okay, first of all, 3 scenarios in the past, the 80 to 82 deep recession, and 29 to 32 bubble crash, and the 2000 to 2000 tech bubble crash, all have the same shape. There's nothing black swan about this, Glenn. It starts with a first crash when the reality sets in and the bubble bursts. We're in that now. That's going to cause a sharp, sudden downturn in the economy like happened in the first half of 1980. Then all the stimulus will cause a quarter or two of rebound, but that won't work because too much damage has been done, and we go into a 2-year slide into deleveraging, deflation of assets. That's when deflation sets in before inflation follows after. So deflation does come first, and then inflation. So that's important to understand. The deflation is about loans being restructured and financial assets coming down to reality, and that's where you lose your money. That's where your business gets in trouble if you're not ahead of it and hunker down. That's where people get unemployed. And all this sort of stuff. And so you have to be ahead of this on every minute. If you got a good job, be nice to your boss and keep it. If you can do something on the side for business, do that. If you can hunker down on your business, cut costs ahead of your competitors. The point of this whole thing is to get the economy healthy again, out of debt, into reality, prices back to where people can invest in the future and afford to buy a home, healthy, but that's going to be painful. You got to get out of the way. Else. If your business just survives this downturn, you're going to have double the market share for years and decades to come. You're going to come out stronger than ever. If you like Joseph Kennedy sold his stocks at the top, and then rebuy when they're down 70, 80, 90%, you're gonna have the greatest gains in your life.
Yeah, my grandfather used to say he lived through the Great Depression. He said those who had money, those who didn't lose it right at the beginning, they made a killing.
Made a killing.
So,
and the business, General Motors
all right.
passed Ford forever and became the largest
Right.
corporation in the world
Right.
out of that.
Right. General Motors, everybody in business should read about what General Motors did in World War II and the Great Depression, because they were the real winners. They were really ahead of the game.
And Glenn, the other big winner was the Mafia. The Mafia played the boom, the roaring 20s, bootlegging, and became the loan shark for small businesses in the Depression, and just hit a home run both ways. The Mafia probably played Mafia, General Motors, Joseph Kennedy are the three great examples of how you make a fortune in a crash instead of losing most of your asset.
And only one of them was really legitimate. So Harry, let me go to the people who are, and I mean, what do restaurants look like? I mean, I don't know how the mom and pop restaurant survives this.
Okay, look, I went to the hurricane in Puerto Rico. We were totally out for 3 months. When we get back, you crawl back, and guess what? I had 21 restaurants within a block and a half of my condo, and 6 out of 7 good ones went under and never came back, and 1 out of 3 of the bad ones went under and never came back, the cheapos. And they just don't come back. Because a lot of businesses are already over in debt or have weak market positions. This just brings that all out. So people who think, oh, this is just a virus, and when it goes back, all this stimulus, V-shaped recovery, there is no V-shaped recovery to this. No way. Only stocks will try that, and they will fail.
All right. So let me go back to the unemployment. When do we start seeing, because we have significant unrest if we have 20% unemployment for very long.
Oh, my God, yeah. Another reason I'm glad I'm in Puerto Rico, Glenn, and we've been in 14 years of recession and no civil unrest. Okay, 82 is a great example. So was the 30s, but that's more reason. The first shock, unemployment went up to 8%. And then when GDP came back for a quarter and a half, all it did was kind of edge back down to like 7%, because it's still the economy's weak, like I said. You don't come V-shape out of it. And then in the next phase, late 81, 82, it went up to 11%, so double those figures. This time, let's call that 15% plus in the first shock. And then you go down a little bit, and then you go to 20, 25% in the longer shock. This is serious. There is going to be civil unrest. It's going to get a point where the government can't backstop every small business and every person like they're doing. You got to realize, Glenn, the government this time, after the last shock and stimulating for 9 to 11 years, nobody knows better than the central banks how weak the economy is, because they keep pumping Viagra into this thing and nothing happens. And so they're blowing their whole wad right at the beginning. What else can they do? And there's no. I tell small businesses, get every subsidy or loan you'll get right now. Consumers, get anything you can get. Be first in line, because this is going to run out. And don't have your money in normal bank accounts other than pay your bills. Have it in a brokerage account in safe haven investments under your own name that cannot be lent against and lose that money. The government can't back all the bank accounts in the country either. So you have to get safe. You can't listen to Warren Buffett or the experts or Wall Street or politicians. They'll tell you this is okay. Don't panic. This is one time you should panic and cover your assets.
So wait. So what is the safe haven?
Okay, number one, we just saw it, Glenn. We just saw it, except for one exception. I told people the number one is the 10 and 30-year, yes, U.S. Treasury bonds, because they won't default. They have to print money to pay them off. Second is AAA. Only the highest quality corporate bonds don't have the default risk when interest rates go down. So bonds like interest rates going down, but only the highest quality. Well, guess what? In this crash, the Treasury bonds did great. The AAA corporates didn't do so well, because when you see you're a cruise line or an airline or a retail store and you see 50 to 80% declines, your AAA rating turns into junk overnight, and you trade like a junk bond. So really, it's the Treasury bonds at first, and then when things settle down, the AAA. So that is the best.
So Do you have belief in a long-term treasury? You say, well, they'll just print their money. They have to pay out. Yeah, well, I mean, money has no value.
No, that's not true, Glenn. Currencies trade relative to each other. And I can tell you this, I've said this for years. Nobody gets it till it happens. It happened in 2008. When the Lehman Brothers and things went the worst, the U.S. dollar went up 28%, and all the other currencies went down. We are not a good house. We're just the best house in a bad neighborhood. Japan has printed 105% of their GDP. Now we're at 20. Europe's at 42. Now we're all amping up again. We are the best house. We're still the reserve currency. Loans around the world are made in dollars. When those loans go bad, especially in the emerging world, dollars are going to disappear. There's going to be fewer dollars, which means they're worth more temporarily. I say the U.S. dollar, and particularly the U.S. Treasury bonds and highest quality corporate bonds, hold up the best in deflation at first. After that, no, I'm not in the dollar. After the dollar just does well as the best house in the crisis, like it did in 2008. When we go into the next boom, it's all going to be about Asia and even less about China. It's going to be about India, Southeast Asia. There's the U.S. is going to be the reserve currency in the future. I'm just saying the U.S. dollar, I mean, there's not enough gold to back everything. And cryptos are the biggest bubble of all. I've been saying the cryptos are going to go down the most. When this happens,
it's
cryptos
crazy.
have already proven not to be. Now, just recently, in just this first crash, Treasury bonds did the best. The U.S. dollar went up, other currencies went down. Gold went up in the early stages, as it did in 2008, and then retreated some. Gold was still the next best to those high-quality bonds because it held its value better than other commodities and way better than stocks. But the ultimate safe haven, I'm telling you, it's going to be the 10 to 30-year Treasury bond during the crisis. After that, those very Treasury bonds and all bonds are going to go into a 20-year plus bear market with rising rates. Inflation's going to follow. Not high inflation, but gnawing inflation's going to follow this crisis, and bonds are going to be trash. But in this crisis, only the best ones. Just sitting in cash. Cash. Like I'd have high-quality bonds, I'd have some gold. It's also a great diversifier, and that's it. And if you want to hedge, you can put some money in a simple, unleveraged inverse fund. S&P 500, you know how to bet against that? You buy SH, SPY on the way up. SH will just go down. If the S&P goes down, 40% here, then you're up 40, and it ultimately goes down 80. You're up 80, and you're not unleveraged. You're not going to get margin calls. You just sit on it, and maybe you put 10 or 20% of your portfolio in that. So small amount inverse funds, small amount in gold, a lot in high-quality bonds. That's where I would be. But you're going to have several months to prepare for this. So it's the real estate you should focus on first, because that just dries up, and I've seen that happen time and time again.